if it does turn out to be just another cyclical capex cycle, and I don't know, your top line goes down by 50%, and your margins compress, and so your profitability goes down by 60, 70%, and then your multiple re-rates by another 50%, you can very easily get to a 90% drop in stock price for a lot of these things. I think the point that I think is very important to get from what Aubrey was saying is that we're not saying AI is not revolutionary, and we're not saying that it's not going to change the world. We're just saying that the timing of it is going to be longer than what people expect. And the ramification of that is that what's happening on the capex side doesn't make sense. So the magnitude, the quantum of the capex and the timing of it combined does not make sense. And that's kind of what tips it over. So in the end, and obviously what makes it a bit trickier this time around is a lot of the capex is going into assets that do not have a very long lifespan. And I think that is different this time. Anyway, time will tell, but I think the odds are this is going to be really ugly when it ends. But we'll see.
Yes, especially because one thing I've heard from a friend who I can't name, but there's been a report into AI spend revenues, and a lot of these revenues are not actually from real customers. When I say real customers, they're not from non-AI customers. So all the sort of OpenAI revenues that, I think, 7 billion run rate OpenAI is at now? Well, how much of that comes from the likes of us? Some, $50 a month. How much of it?
60, Aubrey.
60, okay. How much of it actually comes from us, people in the real world, and how much comes from other AI companies?
Like Perplexity.
Yeah. Exactly. And this is one of the problems that, the reality apparently is that very little is coming from external customers. The vast majority of it is all from other AI companies. So again, it goes back to this circularity of revenues that, NVIDIA is funding Oracle. Oracle is buying from OpenAI. OpenAI is doing a deal with and getting loans from NVIDIA. This circularity is not sustainable.
Yeah, and the revenue numbers that you're talking about, even if they were all real, they're still very, very, very small relative to
the capex spend.
The capex spend.
And the market caps.
Yeah, it's just, there is no business model yet. And I'm not saying there won't be a business model, but it's kind of like similar to what happened in the dot-com bubble, is that eventually the internet changed our lives. And eventually people made a lot of money. But that was like 15, 20 years later. And 15, 20 years later means that, fine, you're right, but in order for the CAGR for an investor to make sense, well, you need an 80, 90% drawdown in the stock price for that number to make sense, assuming you even know for sure that it's going to work out. I think a lot of people kind of hear us out and think we're like Luddites here, but we do use AI for a lot of things, and we do think it's very important. And I do think it's going to get better, a lot better over time. But I think what's happening in equity markets and VCs and a lot of areas is it's just people just get ahead of themselves. They get too excited, and excitement rarely, if ever, is good for an investor.